Meenka, KP Green, just talk us through what is it that stood out for you in terms of numbers?
Yeah.
And then let's bring in Mr. Faruk Patel, who's the CMD at KP Group, to talk to us about those.
Harsh, a strong set of numbers when you look at it from any front. Revenue is up 67%, EBITDA is up 87%. Margins are a standard, 400 basis point expansion, almost 37.2% versus 33.1%. And net profit up almost double from what we saw a year ago.
Right.
Now, a little bit about KPI Tech. Well, it's a developer of renewable power facilities, and it caters as an independent power producer as well as a captive power producer. And we're going to talk to the CMD of the company, Mr. Faruk Patel. Welcome to the show, Mr. Patel. Let me start off by asking what stood out this quarter for you, what drove growth, and why did the margin expansion take place?
Thank you very much to put us on a board and knowing about our company. See, the quarter is a very tough quarter, but as you know, we have a very big orders in our hand. Plus, the execution team is very powerful. So you see the highest quarter ever. We have achieved this in last yesterday result what we have given to the BSc NSC. So as you say,
I think we have just, lost Mr. Patel for just some time.
Mika, while we are at it, just for context, what in your view is aiding margins? So he was obviously speaking about how margins are getting better. Do you expect that to be sustainable?
So in terms of a guidance, we haven't gotten it yet. That was my second question to Mr. Patel. But when you talk about what led to margin growth, first of all, the top line expansion. It was up 73%. Major of it was driven by revenues from sale of captive power projects, which was driven by 73% growth.
Mr. Patel
and I think,
is back, so why don't you quiz him on that?
Yeah. Mr. Patel? Can you hear us?
yes.
Yeah. I wanted to know what aided the margins. What's the key driving factor this quarter?
See, as I told you, the order is a very old order. We have the in our kitty from the last 1 year, and as
Okay, we have Mr. Patel, it seems, on a very poor line. So while we fix that, let's pull up some stocks, in fact, in focus, especially on the back of numbers. There are plenty of them. And thereafter, let's also see what the MSCI rejig has done in terms of stock returns today. In terms of numbers, something like an Avalon Tech up 13%. Apollo Hospitals, we spoke about, up 6. You have Chambal Fert, which is up 5. You have Gujarat Gas up 3.25 or so. You have Endurance Tech also doing fairly well, 2% higher. Anything that's in the green at the moment, Mika, on a day like this, definitely calls for a celebration because it's that kind of a day.
About Gujarat Gas, if you see the numbers, just, if you read through them, everything is down except margin. And what actually stood out and why we gave it a thumbs up in the morning itself was the higher margins. Despite revenue being down, despite net profit being down, their unit per margins, which is one of the main metrics that you look at while analyzing the profitability of a gas company. Their Q2 EBITDA per standard cubic meter margins is up sequentially to 6.4 versus 5.6 last quarter. And this is because of higher spot prices and lower volumes and price hikes.
Mr. Patel is back.
Yes.
Mr. Patel, Harsh, just want to quickly allow you to complete your piece with regard to margins. You were telling viewers as to why there's been a margin uptick this quarter and whether that is sustainable.
no, the quarter is powerful because of the execution only. The fast execution always give you the good margin and good profit also. So that is the one thing. Second thing, of course, we have marked in the last 6 months that the drastically panel rate is gone down, which gives you the which gives your company to a good margin also. That's two things I can say in this in this your question answer that why the margin is high because of this only two things: execution, orders, and the of course the rate gone down of the panel.
In terms of, your orders in hand, cumulative orders of 2,409 megawatts, when can we expect the execution of this space? How much can we expect to be executed in FY25 and FY26?
See, we have already done the till date is 711 crore rupees revenue, and we have an order about more than a 2,000 crore in our hand. But of course, that not going to come in this 2025 March. But you can expect the at least the 70 to 80% growth than the last year.
Percent growth for the next year. Mr. Patel, you said 2,000 crores worth of orders. So the 2,409 megawatt, order book you have is total, and on a total basis, worth 2,000 crores, around 1.1 crores
On
of
a total
revenue.
basis, there is a two type of orders are there. One is IPP and one is CPP. CPP always give you the revenue, but in IPP, they will not the revenue. After commissioning the IPP project, you will get the annuity revenue for 25 years. So, this year, IPP always give you the capex. It is a capex. IPP is a capex. But the CPP, of course, the revenue. So, altogether, you can say money comes in as a revenue in the company from the CPP only. But from the IPP, when it's installed, which revenue will come for 25 years. And I always say one thing, that CPP gives you the top line and the IPP gives you the bottom.
Okay. So IPP is more of the recurring revenue aspect of it. But Mr. Patel, if we had to break it down in terms of how margins perform as a whole, just an average CPP versus IPP, which segment does better in terms of margins?
Margin, of course, 76 to 80% EBITDA in the IPP.
Okay.
Right. And in CPP, 22, 20, 25.
Okay, got
So
it.
in both sector is a different, very different things are there. But of course, in IPP, you need a capex, and you have to do you have to make the IPP in time, say 1 year or say 1.5 year, and then you get the revenue. And in our company, we have a very good customer in IPP, say GUNL, which is the highest order what we got in this year is 1.3 gigawatt almost, and which revenue comes in on a board by 2026 March.
IPP order revenue will come in by March of 2026. And Mr. Patel, how is the hybrid model working for the company? I mean, orders in hand of 1.1 gigawatts. When can we expect this to be executed?
See, you are rightly says hybrid is more than 500 megawatt in IPP.
Okay.
When we say in IPP more than 500 megawatt, which hybrid always give you the very good PLF. Say 50% PLF almost you can see in the presentation also. So in hybrid, the more unit generate and more revenue comes in a company's kitty in IPP. Installation for the CPP hybrid, of course, there is for a solar, 3 crore rupees or 3.25 crore rupees per megawatt. When the hybrid comes, it's near about 7 to 8 crore rupees per megawatt. So that's the difference.
So, you have IPP, you have CPP. They're almost 50% right now of your total order book. Is there a targeted mix? Because on one end, one is high, EBITDA generating, but one is high revenue generating. So what's the strategy there?
You are rightly catch the things. See, as I told you, CPP will give you the top line. The bottom line always maintained by the IPP. Today, 18% IPP and say 72% almost revenue from the CPP, which we are going to increase within 1 or 2 years by this new order what we have won from the GVNL, which we are going to say 30% at least in IPP and rest of from the CPP. This is our target.
In terms of your land bank, you have a significant land bank on your books, over 3,700, 3,000 acres. What's the potential in terms of capacity there, and what's the strategy? Are you going to acquire more land going forward?
Of course, this is the regular things. Land acquire is a regular things. We have a 3071 acres land in our hand today, and 2346 evacuation capacity also we have. In a solar, if you have a evacuation in solar, you need a 3.25 acre land per megawatt, and in a hybrid it's a 5 acre per megawatt. So that's the difference. So whenever we need to do the IPP or the CPP, we required a more and more land, and out of 3071, today we can say at least 2500 land where we are already executing the jobs, and the more 2000 plus acre land we are going to get in a very stipulated, say, 1 or 2 month time.
Acquire more 2,500 acres of land in the 1 or 2 months, in the next 1 or 2
Yes.
months? Okay,
Yes.
got it. So that would increase your land bank significantly and thereby help you, evacuate more projects. And in terms of a growth strategy, the company's been very, targeted to Gujarat. Is there any geographical expansion plan in phase?
Of course, the company now cross.
I think, we've just lost Mr. Patel, a weak line today. But Harsh, he said he's going to acquire more land. The mix of his projects are IPP, CPP. CPP, one-time revenue, higher margin,
Right.
lower margins.
Right.
IPP, recurring revenues for the next 20 to 25 years and higher margins in that front.